Well, the spike in grain prices continues. As mentioned last week, it's all about the weather. Drought in the US Midwest, a heat wave and drought in the Ukraine, and oddly enough, excessive rain in the UK and Western Europe. It's all impacting on both quantity and quality. Here's one figure which might help Australian growers understand how these overseas events will affect the prices here. The drought in America will probably cut the corn crop by 36 million tonnes. So you can imagine what that will do for demand in the feed grain market. Let's head first to the ASX, where trading has been brisk, with prices tempered somewhat by the good rain over grain country in the east. The west had rain as well, but needs more. So prices firmed. Pro Farmer is now advising farmers to actually sell into this rally. Of course, nobody rings a bell when the price hits a peak, but Pro Farmer is suggesting these prices might be very close to that peak. Chicago action saw a fair bit of bouncing, with predictions of the corn yield falling dramatically, yet export sales went through the roof. Wheat exports were also up and soybeans were firm. These prices are at levels not seen since the start of last year. Of course, nothing fixes high prices like high prices, but market chatter would suggest there's more upside to come. The tracking price here in Australia continues to firm. Canola is catching up and sorghum had another lift. That's the best price for sorghum for at least 2 years. Moving to livestock, and Beef Central newsletter is very keen to point out the problems for lot feeders as feed grain prices escalate. For example, feed wheat delivered to the Darling Downs has lifted $35 a tonne in just the past month, placing feedlot profitability in negative territory. And on top of that, our dollar being above parity is making overseas orders very hard to firm up. Nevertheless, sale yard prices were firm to strong last week despite a big lift in numbers. Buyers were chasing the quality offerings in the north. 10,000 head actually went through the Roma yards, with restockers very active. This pushed the Eastern Young Cattle Indicator up 3 cents to close at $3.82 a kilo. News from the far north is good, but a little bit fuzzy. The quotas have been released, and it's for the entire remaining number of about 92,000 for the last 6 months of this year. Will that be all? Will there be an extra quota come October, November? Nobody seems to know. Everybody's hopeful, but with the live trade in Indonesia, nothing should be taken for granted. Quotes out of Darwin are relatively firm to strong, with some expectations of more upside, and there are boats heading northwest as well as north. Lamb and sheep numbers lifted last week with the usual midwinter quality concerns. And with the cold weather, restockers are staying at home. Heavier lambs dominated most selling centres, while the sheep market strengthened somewhat. Australian dairy farmers have been doing it tough lately. Margins are extremely tight and export competition is fierce, with the weak New Zealand dollar making Kiwi products very competitive, to say the least. But it's still an industry with more than $2.5 billion in exports for Australia every year. Both these prices have been declining, but there is some expectation of a turnaround later in the year. Joanne Bills from Dairy Australia says Australian producers just have to hang in there.
So basically every major exporting region around the world has had a combination of pretty good seasonal conditions and reasonable farm gate prices, and we've seen all of the production regions respond, particularly New Zealand, which is up around 10% last year, but even the EU and the US have continued to grow as well, and that means that there's a lot more milk on the international market than can be absorbed in the short term.
To New York now for the soft commodities. Sugar had a lift on the back of some concerns about the Indian crop, and cotton slipped again, with confirmation that American cotton stocks are way above the levels of this time last year. Finally to wool, where the market slumped overall by more than 2% as producers looked to sell before the 3-week midwinter break in auctions. The saving grace was the rapid appreciation of our dollar against the euro. The Eastern market indicator closed down 1.4% at 1,062 cents a kilo clean. Wool auctions will resume week commencing August the 6th. So that's the Landline check on price.